Hub Conversation. ChiBizHub, an initiative of World Business Chicago, is committed to serving Chicago's small business community. This conversation is dedicated to providing information and access to subject matter experts on topics important to you, our business resource providers, and the small business communities we all serve. Today's conversation is business credit versus personal credit. We are very fortunate to have guests joining us who can help us better understand all of that. Before we begin the conversation, a quick reminder that when you're looking for small business resources, support, and information related to COVID-19 and overcoming the inherent business challenges, we invite you to turn to our support portal, chibizhub.com/COVID-19. It is my pleasure to invite Jasmine Garcia, Program Manager of ChiBizHub, to begin today's conversation.
Thank you, Andrew, for that incredible introduction. I want to welcome everyone here today. I want to share a little bit more about what ChiBizHub is if you don't already know and you're brand new to joining our webinar series. ChiBizHub is the city's online portal that links expert service providers to Chicago's small businesses, entrepreneurs, and startups looking to start, grow, or scale their business. In the wake of the coronavirus pandemic, we quickly shifted our work to include webinars like the one today, providing a forum where our small business owners and operators can gather together, get real up-to-date information in real time, and have a chance to just get their questions answered as they're learning together. In sum, we're all in this together. I welcome you to visit our portal, chibizhub.com, and check out all of the great business resource providers. We're up to 170 right now, and to help you with your business. It is my pleasure to turn it off to my colleague, Kendra Thomas.
Thank you so much, Jasmine. Excellent, excellent job in presenting that piece. 170 is a major accomplishment. We are super excited today. We have a phenomenal panel. You all are in for a treat, and we are grateful to have these three wonderful guests. So without further ado, actually before we get started, I want to ensure that you are aware, if you are an actual participant in the webinar, that you are actually muted. And if you have any questions, please ensure that you use the chat box. Jasmine and I will capture your question, and we will do our best to ensure that the panelists do have an opportunity to answer the questions. So I wanted to start with our actual introductions. So today we have Mr. Kevin Smith. Kevin, thank you so much again for joining us. And I want to share a little bit about his background. Kevin is an award-winning entrepreneur who was introduced to entrepreneurship through his gift of writing and performing poetry on the campus of Western Illinois University. During Kevin's time as a board member for the National Black MBA Association, Kevin was the chairman of the entrepreneurship division of the organization. He made it his duty to improve the programming for entrepreneurs by implementing the Elevator Rising Workshop and the Pitcher's Mound Business Competition that awarded $5,000 to the respected winner. During his time span as a consultant, Kevin has advised, strategized, and implemented initiatives with clients to see growth as high as 800%. Wow, that is amazing. Others eclipsing the $1 million milestone. The efforts of Kevin's work were taken notice by the Diversity MBA organization, which they've selected him as a 2019 top 100 under 50 emerging leader and executive award recipient. Again, thank you so much for joining us, Kevin. Next, I have Ms. Letitia Flores-Poole. She has been in banking for over 20 years. She currently is with BMO Harris Bank, and she serves as the organization's regional sales manager, Bank at Work program. She has the pleasure of providing financial education and solutions to employees throughout the Chicagoland area. She also enjoys being able to educate and help people on the west and south sides of Chicago reach their financial goals. Letitia is married with one son and one bonus daughter and 2 grandkids. Thank you so much again for joining us. And last, but certainly not least, we have Rogelio. He is an accomplished senior financial institution sales and business manager with more than 25 years of experience driving new business development, customer service satisfaction, channeling partnerships, quality and profitability to record levels in business, retail, and commercial banking environments. Over the course of his career, He has demonstrated expertise in building successful sales and banking teams, portfolio management, talent management, as well as risk and compliance. Thank you so much again for joining us. And we want to go ahead and get started. We know that our audience is eager to learn from you guys. So if you could each tell us about the role you play in providing assistance to entrepreneurs and business owners. And Letitia, if you wouldn't mind actually kicking us off.
Sure. And again, thank you for having me. It is definitely my pleasure to be a part of this group and this panel on such an important topic. A few ways that BMO Harris is helping our entrepreneurs and our communities. First, I just wanted to reflect on the immediate, the pandemic. We helped, well, myself personally, I helped well over 200 clients myself, but my organization helped over 20,000 small businesses receive SBA PPP funding through this pandemic. Pre-pandemic, and now we are one of the SBA preferred lenders, which definitely gives us the ability for that entrepreneurship. Many individuals feel that it's tough to get a traditional loan through a bank. We are helping individuals, we're helping startups because we have that SBA strength behind us. We also are able to bring resources as far as financial literacy and education. So we don't want to just bring you to the bank and bank you. We want to educate you, and we want you to ensure that you know how to handle your business and your personal finances. And we offer over 40 different seminars that I myself come out to places of business and I teach the employees and the business on topics from budgeting, debt management to credit. And that's just to name a few.
Thank you. Thank you. We definitely want to elaborate on that a little bit more later in the webinar. That's amazing. Rogelio, can you share a little bit about what you're doing over at PNC?
Sure. Thank you, Kendra. And again, thank you, Jasmine, for the invitation. And good to be here with the panelists. So at PNC, one of the things that we do is, of course, trying to have conversations with business owners, taking a look at their cash flow systems, operating cycle, looking for ways for them to be efficient, especially as Letitia mentioned right now with the pandemic, looking at alternatives for getting monies faster into their business and limiting that touch, I would say. So we're going to touchless ways of receiving monies, ways that they can improve those efficiencies and making sure that they keep their business in order.
Thank you. Kevin, we would love to hear more about what you're doing with the e-perspective.
Okay. So what we do over at the Perspective is actually provide infrastructure for startups. Not only that, through some of the partnerships that we were able to garner, we are able to offer them funding options as well. So what we do is, our goal is just to make sure that you have the foundation that prepares you for growth, and then once you be able to get the funding, you will be in position to allocate those funds to your company and grow and reach your growth potential.
Thank you, everyone. Those were incredible introductions, and we were super excited to have you all here. We want to get right down to it, and I know some of you kind of already touched up on it, on how you're having the community, but we want to talk more about, among our underserved communities in Chicago, financial literacy often lags behind other wealthy communities, supported community groups. How are you helping to address this gap to empower business owners of color? Rogelio, would you mind kicking us off, please?
Sure. Thank you, Jasmine. So as far as helping our communities of color, the way that I look at it and the way that I approach it is having conversations with our community leaders, with the chambers of commerce, trying to be that resource, having that hub of resource, such like yourself, being that port of entry, getting them to the right individuals that can give them the expertise as necessary. If they need accounting assistance, connecting them to a group of individuals that will give them that technical assistance. If there is government funding or grants are available, being that person that can get them to the individuals, more like being a connector. And I work with different organizations, and you might not be aware, but I also preside over the Hispanic Business Network, where one of the things that we look at is commerce development, and trying to get connect the buyers to the sellers, making sure that they're able to grow their business as best as possible.
Thank you, Rogelio. Kevin, would you like to go next?
Sure. So for me, I'm more of a I'm more of a community guy. So I'm boots on the ground. Also hosting many workshops, especially on financial literacy, because I'm actually a product of kind of in the city. So I kind of understand the deficit that it is, but we have so much buying power in our communities. And if we can just try to transform those into opportunities where we have more owners, more Black business owners and entrepreneurs that are funded through there. It's just giving them the option to understand through workshops what's available. So I've been partnering with so many people just to actually help host some of these workshops as well, to give them the options and letting them know what is out there as far as grants, and the best way to write the grants to ensure that they are not passed over. Just some of the different knowledges about different grants that are out here that can serve their businesses, no matter what type of business they have. So I'm more of a hands-on guy when it comes to spreading the word.
We need people like you, so I love that you shared that. Leticia?
Yes. So as I mentioned, one of my primary roles, and BMO is committed to. So it's myself and I have 5 other counterparts that work the Chicagoland area that's dedicated to bringing financial literacy to our communities. Whether we bring it in virtual seminars, I've done multiple virtual seminars throughout this pandemic, but prior. We have a host CRA lending, and we have a CRA team that's dedicated to hosting first-time homebuyer seminars that are dedicated in the inner cities. We pride ourselves with working with non-for-profits such as Spanish Coalition and a variety of other different types of organizations that their primary goal is to work within our inner cities. In addition to that, when we're doing our lending, we have CRA guidelines and focus that we need to ensure that we are making sure that we have our branches located through these markets, and we actually have an incentive. We've created a special lending incentive for the mortgage side that if you purchase within certain communities, we're going to give you some additional funding as a grant. So a variety of different resources we have. Plus, we have a very strong, engaged diversity and inclusion team that is really working and continuing to strategize on people of color.
Awesome. Thank you all for sharing. So now we want to get right into it, and we really want to talk about personal credit, business credit. And so this is a topic that Jasmine and I frequently have to talk about with our entrepreneur community, because so many people, when starting their businesses, they want to actually utilize business credit, but they're not aware of how to establish it, or they may need different things for their business and they may have to use their personal credit. So Kevin, if you wouldn't mind kicking us off on talking about what is the actual difference between obtaining personal credit and business credit?
All right. So when obtaining personal credit, you're signing up for it as yourself under your own like social security number, and you're running it, personally. It's tied to your name. But when you establish business credit, it's tied to your company. But the thing is with that is that in order to establish business credit, because you're coming out the gate, a lot of us are not, like Donald Trump, where our parents just drop $1 million in our lap and we could just go from there and start a business. So you have to do it gradually. So the best thing to do when establishing business credit is to start out with getting some net 30 accounts. And when you start a business, the first company that actually reaches out to you is Uline, and they'll reach out to you and send you a bunch of stuff, and then you can. There's so many other ones as well that actually come through that you can build those rapport with, and you can just buy little things to kind of build it up to just show that you are making those payments every month. So what happened is when you first go for a loan, you're gonna have to sign for it personally. If your company isn't doing a certain value, to where they can look at it and say, okay, if you're asking for a $5,000 loan, but your company is doing $15,000 a month, and they're always in a positive month in and month out as a cash flow, and they can say, okay, all right, this looks good, looks promising, and we can give you the $5,000. But one thing that is key, is critical, is if you are a business owner, you have multiple people on there, and you have multiple owners that has equity in the company. Everyone, and when you're going for a business loan, everyone has to have that 680 or above. That's what they're kind of asking for now in the pandemic, is about at least a 680. But everybody has to qualify, because if one person doesn't qualify, then you have to sign on it personally. But you can sign personally, and then eventually, as you build your business credits, you can have your business take over that loan.
Awesome, awesome. Letitia, would you mind elaborating a little bit as well?
Sure. So Kevin actually stole all my points. No, just kidding. Actually, so business and personal, extremely, extremely important to know the difference. And many individuals say, well, I don't have any business credit. How am I going to establish it? So he hit on the net 30, being ensured that you could develop those accounts payable. But also, when you think about personal credit, these are your personal liability, right? Your personal assets. And it's very important to be able to separate business and personal. So a lot of times what people do, they use their personal account for everything, business and personal. That's a huge no-no. So I always, as a banker, old school banker, you have to be able to divide what is your business assets, what is your personal assets, because that's huge. Now, again, as you're growing your business credit, you are going to look at the personal credit. So that's why it's important to say, how does my personal credit look? What is my debt versus my income? Because all that's going to flow right into your business, right? And then ensuring, when you are setting up that business account, look for individuals that potentially will start credit with you. For example, with us, we will give you, after 30 days of having a business account, we will give you a business credit card. Many individuals say, oh, I don't want to start credit, but you need to, because that's going to help identify and start building that business credit sooner than later. And then, for example, and that's a question that they want to ask when you're looking at developing business credit versus personal. When you're going to develop business credit, you want to ask the individual, what do you report to? Are you going to report on my behalf? For example, BMO Harris, we report to the Small Business Financial Exchange. So we immediately start reporting under your business for you. So those are some things that you want to look at to ensure that you're separating your business and your personal, and you identify that personal is my assets and business belongs to my business assets.
Wow, that was a phenomenal topic. And just the way you talked about how you need to know who those agencies are reporting to. So thank you for sharing that. We have someone in the chat room that's kind of sharing who their organization actually has just started reporting to. So you were right on target. Rogelio, would you mind actually sharing as well?
Sure, thanks. And those are great points that Letitia and Kevin brought up. I mean, that's the biggest thing, is that even before applying for credit, is taking a look at the credit. And Kevin, you brought it up as well with the partners. When you're going into business with a partner, having those conversations ahead of time. You don't want to be surprised when you open up the business and you're looking to apply for credit that, oh, the other person doesn't meet the criteria to be able to borrow. So having those conversations ahead of time with your partners, that's one. Knowing what your credit score is. A lot of the credit cards nowadays, they issue your credit scores, and knowing which one they report to, bringing it back to Letitia, where it could be TransUnion, Experian, or Equifax, knowing where they are reporting on the personal side. On the business side, looking at Dun & Bradstreet. And then there's some businesses, as Kevin mentioned, where you can establish trade payables, trade credit. And what is trade credit? Trade credit is significant to the business that you're in. For example, a plumber may require to buy piping. He or she can obtain credit from Home Depot under piping and ensuring that it's under the business name and reporting it to the business name. That is a trade creditor. They're buying it on credit from them and paying them for those supplies. If it's somebody that is driving, has multiple transportation, multiple trucks, the gas company, the fuel company, the credit card, having that set up, that's a trade payable. So establishing those, and right off the bat when you're starting, I mean, you have to be a big company for the bank not to ask for personal guarantees. Understand that they're going to ask you to guarantee your debt, guarantee you know, we don't want to be, it's not venture capital that the banks are giving. It is an investment. It's a loan to the company, but we want you to grow your business and go forward. So that's the difference that I have on the personal and business.
Thank you. I see everybody taking notes because we're already getting questions. We will reserve those. We will have time. I trust everyone at the end. I think we obviously want to focus on business credit here because of our small business community, right? And so I want to make sure that, you know, we use this opportunity to break down common misconceptions that business owners have about building and maintaining their business credit. Leticia, would you like to start us off?
So clarifying on what are the resource, like who they should report to their business credit?
No. So common misconceptions. So like when you're building out your credit, what, like you all work with the community, right? And they are like, no, maybe I can't do this, or maybe I can't do that. That's what I've heard. And so if we can just demystify something that, the things that you've heard while working with the small business community.
Yes. So a lot of them, well, a big part of building credit is when you're going to apply for credit, right? And potentially you feel that, well, my business is not, you know, I'm not making too much money, or I haven't made any money yet, right? Or how do I really explain myself to the bank? So a couple things is, when you're going to start business, it can't just be an idea to say, oh, well, I'd like to be able to start selling clothes because I love fashion, right? Like, you have to have a business plan, right? So I'm a big proponent of getting prepared, right? When you come and you look like, hey, I am, and then you have to use your personal resume. Some individuals say, oh, well, they're not going to help me because I'm a startup. Well, if you've been in banking and now you want to be a plumber, well, you may have a bit of an issue, right? But if you've been in banking and now you want to potentially advise people and have your own investment firm, okay, well, then that's something different, correct? So it's a lot of misconception of, oh, well, I'm interested. That's a hobby of mine. So I want to do business in that field. So really first being in the know and doing your research on the field that you want to do your business in. I always tell people, so I go to a business plan first. And then also another misconception, and not even, it's a misconception, but it's also a practice. And I'm sure Rogelio and Kevin have both seen this, that they'll come and they want to apply for a loan, but their tax returns, they haven't done any, or they claim zero assets. And they're saying, well, my accountant told me to put all these deductions so I don't have to pay. Okay, well, how do you want us to give you $100,000 if you're reporting that you made zero, right? So again, I'm really big with record keeping. I guess that's just a banker in me, but keeping clear records, keeping clear track of what you're doing, what have you invested in your business, and having to have a little bit of some skin in the game, right? Some individuals get a bit upset and say, well, they're not going to lend to me because they're going to expect me to have this. Well, you have to have prepared to start your own business, and the bank or anybody wants to see what does that preparation look like. So you have to do a little bit of homework.
Appreciate that. Thank you, Leticia. Rogelio, would you like to chime in?
Sure. Thanks. So on the misconception, I think a lot of business owners, as you mentioned, they might be setting their own obstacles ahead of time, or they might think that they're on their own, really on their own. You know, I'm in my own businesses, I run it on my own. So they overlook the resources that are out there. They don't look for them. They're not aware of them. You know, and every business owner that I talk to, I tell them, you know, you should have typically 5 good friends, right? Your accountant should be one of them because he'll keep track of it. Your attorney will protect your assets, right? You should have somebody in marketing that will help you sell your assets. Then you have insurance guy that will protect your assets. And then of course the banker that ensures that it can connect you to the resources that will help you grow the assets. So, and then the other misconception is that everybody wants to get in business, but they forget to plan ahead to get out of business. You know, if I'm going into business, I have to have an exit strategy, I mean, you think you go into a building, you're not going to stay in there. You got to get out. So how are you going to get out? What's the strategy? What's the plan? How are we going to do this? Is it step by step? You know, what are our goals? What are our benchmarks? Where do we want to go? Okay. And then look at it. What am I going to sell? To whom? How am I going to get paid? By when? What will I make it easy? What will be cost less expensive? How fast do I want to get paid? And you're always going to hold on to your money as much as possible, right? How can I pay at the last minute without being a day late and a dollar short? Dollar short meaning late charges and affecting the credit. So looking at ways to pay electronically right on the date of. So you look at both getting paid fast, paying right on time, and growing the business.
Amazing. Thank you so much. I know, Kevin, I see you, Kevin, with your notebooks. I'm like, I know you have something to add.
He was
Okay.
writing down the 5 friends. He was writing down the 5 friends.
Yeah, I was writing down the 5 friends. So what was really important that was said was about the business plan and making sure that the biggest misconception is that when you get the funds, when you secure the funds for your company, it's really important that it's not your funds. It's your funds to grow your business, put that money into marketing, inventory, payroll, whatever it is that you secured the funds for, use it for that. And just making sure that you understand the rates. Just signing up for anything, because it's a lot of companies out here that are offering funding, and they have very high rates, and those payback periods are quicker, and they have cash flow loans where you basically plan on them weekly. So just making sure you understand the terms and conditions of whatever loan that you're getting into, and making sure that when you do secure the funds, that it align with your business plan. The business plan is definitely that. It shows a foundation of how you plan to allocate it and get your product or service to the masses. What strategies that you have within your marketing plan and your operations plan, how you plan to run your business, so that when you do get the funds, you don't freeze up and you just do exactly what you intend on doing, and that is going to help you for success.
But before you go on to the next one, I just want to also mention one little misconception that we see it as bankers, especially when we try to advise clients on new technology, new ways of doing things, that they will say, well, it's an expense. That's too expensive. It's the cost of doing business. It's either going to be, if you're and I'll just give an example. Let's say that you are a body shop or a mechanic, or where you're charging $90 an hour, but you're spending an hour every day to do your accounting, your bookkeeping, your checking, instead of having it expedited a little bit faster to do it in 10 minutes or 5 minutes a day, you're spending an hour a day. That's 5 hours. You got to look at it instead of saying, oh, I got to pay $30 or $40 a month.
Mhm.
That's too expensive, as opposed to saying, I'm wasting 20 hours a week or a month doing that. That's costing me $90 times 20. That's costing me much more. So ensuring that the cost of something, you're comparing it to the loss of income, as opposed to just an expense. And that's a misconception, where one of the things we got to work with the business owners to understand that every hour that they spend is income that they're losing. Therefore, when they're paying for something, understand if it's adding value or it's not.
Oh, I do have one more misconception. A lot of people that I notice is when I talk to small business owners, I tell them about funding opportunities, and they also automatically look for grants, and there's nothing wrong with finding grants. But when I tell them about loan opportunities, they say, I don't want to owe nobody. But you got to understand that every successful company has had somebody fund their company. They didn't have venture capitalists or whatever, and angel investors come in and drop those seeds into their company, and they go through numerous rounds of funding. So you got to understand that you have to bet on yourself. If you have your plan together and you know exactly what you want to do, then you shouldn't be scared of funding. You should embrace it, because your Mark Zuckerbergs of the world are all the people you can think about that are successful, all have funding rounds to inject into their business in order to take them to that next level. So don't be afraid to go for funding. Just be smart about how you approach it.
Wow, you guys are doing a phenomenal job because we have tons of questions that our participants want to ask you all, and we promise, as Jasmine mentioned, that we will get to all of your questions. So I want to pivot a little bit, and the next topic sometimes is not as easy to talk about, and it's credit reports. And so we know when people hear credit reports, sometimes people cringe and they're covering their faces because it is really looking at what's on your report. Do you all have any recommendations on reputable agencies that we can actually share with our participants on checking their credit reports? Rogelio, do you have any recommendations?
Well, the first one that I recommend is, of course, annualcreditreport.com. You're able to look at your credit annually at no cost, once a year at no cost. There's 3 big repositories that are very common here in the Midwest, with TransUnion, Equifax, and Experian. Recommendation, typically what I recommend my clients is that the first year that you do it, get that free credit report, get it from all 3 to make sure that everything is matching up. And take a look at what's there. Take a look if there's any errors, anything that can be erased or corrected. There's 4 numbers there. You can call them. It's 1-800 numbers. You'll be able to call. So then after that first year, what I recommend is staggering the credit report. Because you could do it, let's say you pull your credit report today. A year from now, when that year comes up, you just want to pull one of them, TransUnion. 6 months later, or maybe 4 months later, pull Experian. 4 months later, pull Equifax. That way, you're going to be able to pull the 3 credit reports every 4 months. And you'll be able to keep on track on what's going on, as opposed to having to wait a whole year or then later on paying for it. So you're able to, they have that once a year free look, so you're able to select which one you want.
Wow, that was a phenomenal tip, Rogelio. I've never heard anyone mention that. Thank you for sharing. Wow.
Sure.
Kevin, would you like to actually elaborate a little bit on some other reputable agencies?
Yeah, for me, it would be freecreditscore.com. They do give you all 3 reports, and then they give you the FICO score as well, so you can know exactly where you stand. And the good thing about that is that some people, when they do ask when you are going for funding, some people require that some people pull from different credits, as we stated before. Some people pull from Experian, and some people require that you have at least 720 FICO or 680 or 690. So it's good by you knowing your FICO score, at least allows you to give you some leverage on knowing what loan you could probably apply for once you start asking those funding questions to a lender.
Thank you, Kevin. Letitia, do you have any other recommendations?
Yeah, I have 2 that I like to use for the personal side. Experian has really created a nice app to check it, and they've now created something called Experian Boost. And before I ever talk about anything, I always use myself as the sacrificial lamb, right? Because I'm like, I don't want to talk about it before using it. And what Experian Boost does, it does require access to a checking account, but it's going to allow your credit score to receive a boost for utility bills. So light bill, gas bill, phone bill, which is really nice because some individuals feel like, well, my credit's not really increasing, or I don't really have any credit, or maybe I have a few, or maybe I have some credit that I need to repair. And that's a really great way to repair your credit. That's why it's a big recommendation to use your checking account to pay for your bills, because now you go back and you could reflect, and an Experian Boost literally will boost your credit 30 to 40 points if they can show that you have repetitively paid your utility bills on time. So Credit Boost, Experian Boost, and those are free. And then, of course, Credit Karma. I like Credit Karma because it's quick and easy. and it allows you to see TransUnion and Equifax. So I kind of toggle between both of them. I also appreciate both of them, all three of them, because it's also easy disputes. So if you see something that you want to dispute, you could dispute it right there online. Then they will give you your progress as it goes. Okay, we're looking into it. We've taken it off, or we've done this. And then it also gives you suggestions on what you can do to make certain moves that would be in your benefit.
Sorry. My bad. Next question. We can move towards when starting a new business, is it good practice to use your personal credit to obtain equipment or inventory for the business? Why or why not? Leticia, would you like to start us off with this one?
Yeah, so this is it's a tough one, right? Because normally you have to try to use your personal to establish business, but you want to try to do your research. Again, it goes back into doing research, right? You want to do your research to companies that will allow you to automatically begin to use your business. But some places may say, well, the business doesn't have any credit, so what else can we use? Can we use, what type of collateral do you have? And typically your personal credit is the one that you have to use. But what I will tell you is, as quick as you can get it out of your personal and into your business is what you want to try to do as soon as possible. For example, you obtain a loan, you obtain some credit under your personal name, and it really belongs to your business. Well, in that interim, you should have set up a business account. You should have seen if you could try to at least apply for some type of business credit, or see what resources your bank has to allow you to get a loan for inventory or for equipment that you can then take that personal debt and put it into the name of the business sooner than later. So yes, a lot of times you have to use your personal to do the business because you don't have any other resources, but research what type of other programs can you do in addition to using your personal credit to get on that roadmap to get it out of the personal sooner than later.
Thank you, Rogelio. Would you like to add to that, by chance?
Yes, and it brings up a good point, going back to the misconceptions. Another one, a startup business isn't the day that you start running the business. The startup usually starts in the planning of the business. So if you start in the planning portion, setting up your business account, putting in the capital that is going to start the business, and doing the expenses that you do with the business checks, you're starting that credit history. So when you do apply for credit, such as equipment, and you want to do it on the business side, they may ask for a personal guarantee, so they'll take your personal credit under scrutiny and use it. But they're going to call the bank, or they're going to ask for a verification from the bank, and the bank will be able to say they have an established business account for 6 months, not 6 days, or not 6 hours. Because I kid you not, I've had opportunities where somebody will come in and say, I opened up my business last month, I need an account today. It's like, okay, well, back then, we needed it back then. So, but that's one of the things about planning, if you fail to plan, you plan to fail. You got to make sure that plan is in place.
Kevin?
Well, they hit the nail on the head with that one. I would say one of the things that you
Kevin, I'm not sure what's wrong with the audio, but we can't hear you.
Okay. Can you hear me now?
We can hear you now.
Okay, I don't know. I just have to make a quick shift. Signing up personally, sometimes you may already have cards that's in your name. And this is a part of the bootstrapping that they say, where you're actually funding your own. And that gives, as we talked about, skin in the game, betting on yourself. This is an opportunity that you can use your own credit that you already have. But of course, we are going to have to sign for it personally. So I don't want to talk about what they said, but yeah, if you already have cards that you already own, you may be able to use that to fund some of it, because of course you're going to work even harder to pay it back, because it's just, it's your money that you're using, or the money that you're signed up for. So yeah, as long as you have your strategies in place, I think you'll be fine.
Thank you all. So now we want to talk about credit scores. So what is an ideal? I know. Credit scores, they're a hot topic because they unlock a lot. So we want to have you guys just really share, what would you consider to be ideal credit scores for the consumer or business? Kevin, do you want to go ahead and jump in?
Yeah, since I made that that gesture. Yeah, ultimately somewhere with over 720 is really good, because a lot of times they do ask for 680, but that's just the minimum. So if you're going for funding, you want to make sure that you exceed it. And the great thing is just making sure that you keep your DTI down. And even if you are using cards, keep your utilization rate at 10%. This kind of push you in a better position to secure a loan. You're gonna look great on paper when you're filling out these applications. But somewhere in the 720s is definitely good. The higher the better. That means it's gonna, and I'm sure my other panelists can attest to this, is gonna drop your rates even low. So when you're looking at getting the best rate on the money borrowed, it's best to have a 720 or better.
Thank you. Letitia, can you please share with us?
Yeah, so the number I had written down was 700, but I could tell you that's definitely now, during this pandemic, possibly pre-pandemic, I would tell you 680. And the reason for the change is because we understand that people have gone through some financial difficulties, and you would think it would have reversed, right? Like, okay, well, we're going to have some understanding. Unfortunately, there is a bit more scrutiny, because now people are a bit concerned to say, okay, well, you're going to be able to make it through. So sweet spot, I would definitely tell you on the personal side, 680. If you're looking to continue to grow your personal credit, but to definitely kind of get business credit, 700 or better.
Agreement with both Kevin and Leticia there as far as the credit scores. I mean, we look at, if you think about it as a, I guess I'm a school kind of person. I like grades, A, B, C, or D. A grade, it's north of 740, anything 740, 750, north of that. And knowing what those ranges are, right? Like the biggest score you can have is 850 on one area. So anything north of 740, 750, you're taking care of that credit. And you can always, when you obtain your credit report, you can take a look at what's impacting it. Is it the utilization? Is it the number of term loans? Is it the history? Is it the inquiries? It'll give you a thought process behind it. B grade, I think it would probably be in 680 to 720. And then below that, it needs to be worked on. There's things there that have to be looked at. Are they reporting correctly? Are there things that should be raised? I don't think that medical collections are playing a big impact as they used to a while ago, where medical collection or something like that would impact the credit score quite a bit. I think that's been a little bit more lenient. But nonetheless, during these times, medical collections will come up there. So that's why you got to take a look at what's on the credit report. But I think the credit score to look for is to strive for north of 700, north of 720, being in that A grade, in the A stuff.
Yeah.
And it is risk-based pricing. So the better the credit is, the cheaper the money will be, and the more of it that you'll be able to access.
Yes.
Sorry, Mike, I didn't know, Kevin, if you wanted to add anything else.
Oh yeah, I didn't.
Go ahead. That's okay. Go ahead.
Yeah, it's, one thing that I wanted to add too is that when we did talk about like some of these platforms like Credit Karma and Credit Sesame and all these different type of platforms, they actually help you stay on task with that. That's one of the great things about them. Like you can look at the hard inquiries that you have, and you got to be aware too that some things do report on different credit bureaus than others. So you may have something on Experian that may not show up on TransUnion or Equifax. So it's good to like be able to keep monitoring those and making sure that your inquiries are not as high either, where you just constantly going for loans. You know, if you deny it, you may have to wait a little bit to boost your credit up. But it does give you those foundations so that you can look at what is you know, where you're struggling at, what is paid, or what is, you know, in collections right now, that's giving you those derogatory remarks that can help you boost those once you get those cleared off.
Real stuff, real stuff. We're gonna go ahead and pivot right now because I know we're running out of time and we have a lot of great questions. So one of the first ones is from one of our guests. They say, we have been in business for 20 years and have a Dun and Bradstreet. How do we pivot to business credit? We have business credit cards, accounts, etc., but it originally started with my personal credit. We are a one owner agency. Do any of you have some advice for this guest?
Yeah. So what you could do is when going for a loan, once you show, they'll ask you for, since you've been in business 20 years, they're going to ask you for 3 months bank statements. Make sure that each one is in the positive. And you just make sure that each month ends and begins in the positive, and you don't have no more than 12, as they say, negative remarks as your account being in the negative. Once you show that, and then I guess, you know, 2 years or a year or so of tax returns, then you should be able to get any funding that you need once you can, especially proving as a business that you are making. Some of them do require that you make that you at least gross 10,000 a month. So if you're exceeding that, then I think you should be well on track to obtain some funding.
I would say as well, if you've been in business 20 years, I mean, putting the debts in the business, take a look at what you currently have that are personal debts that you took out on behalf of the business. And if you're applying for a bank loan, going through that with your banker and saying, okay, these debts, I took it out for the business, I'd like to put them in the business name. They might still require a personal guarantee. Like I mentioned, you have to really be a big organization, big business with revenues north of 10 million or more to really be asking for no personal guarantees. All the banks to businesses with less, and I say all the banks, but the majority of the banks with revenues less than 10 million will require a personal guarantee. So that'll still report on both sides. So report on your business credit, but they won't report on your personal unless you're delinquent. So you really will be focusing on the business credit. Just the other part is that as long as you're not past due on those payments, your personal guarantee, your personal credit won't be impacted.
Yes, so we actually have another question that has come from one of our guests. So what is the need for the exit strategy? And so I think, Rogelio, you touched upon this a little bit. Is that retirement? Is that business failure? Is that succession planning?
So there's a couple of things around the exit strategy. We look at financial planning. One is retirement. That's one, that you go into business, you're looking to go into business until you retire. So putting that plan in place ahead of time. Do you need to set up a 401k, a pension planning for you? If you have employees, helping them retire as well so they can grow with you. So you don't have that employee attrition that they'll be going elsewhere. So it'll be for your business, grow the business, give a plan to retire. The other one that we sometimes overlook is with the partners. Kevin alluded earlier that, you know, when you have partners, credit is one thing, but the other thing is that when you have partners, what happens if one of them wants to get out of the business, or what happens in the event somebody dies? You know, if you don't have a plan in place, you may be in business with their whole family, not just with them. So having a buy-sell agreement and having it funded through life insurance, so that way you know what's going to happen. That's why one of those 5 friends is the attorney. That's why you got to have one of those, making sure that you have that plan in place ahead of time, just in case. And that's when your insurance guy and your attorney are good friends as well.
Kevin or Letitia, I didn't know if you had any advice around the exit strategy at all that you wanted to share?
Rogelio hit it all. I
Yeah.
would say, I said retirement, and to start building a savings to ensure that you have a bit of cushion when you can. And I don't care if it's just $10 or $20, start putting money in a savings, save.
Amazing. Thank you so much. And I think we have one of our final questions before we close out and give you our final question. We have a guest that says, does my company get its own FICO score?
Yes.
Yes.
Yes, and that's what business credit is. So a FICO score is your personal credit. Business has it too. That's why there's Experian for business. There's the Small Business Financial Exchange. There's Dun & Bradstreet. Those are all different agencies that will report credit. Now, the model may be a little different, kind of similar, because FICO is what describes how the model of our credit bureau looks, how our score is made up of. But that's what it is. Business credit is a business FICO. Absolutely.
Great. Thank you so much, Leticia. And to close us out, since we have a couple minutes, we just want to make sure to give all of you an opportunity to share 3 tips with our audience today that can help them improve their personal and business credits. Would you like to start off, Rogelio?
Thank you. The first thing that I gotta say is, the first tip is take a look at your credit report, both business and personal. You do have access to it. Dun & Bradstreet, it's information that they may have fees for it to have it, a Dun & Bradstreet file, but take a look at it as well. Find out your trade creditors that are reporting and take a look at what they are reporting. On the personal side, take a look at it, balance it. And the last tip, and I would say, we say plan before the business, plan during the business, plan for after the business. If you're, you go into that building, if there's a door lock to get out, you got to find a way out. So what is that alternative plan? Look at it, we call that course correction. If it's not going up to par, you set your goals. If they're not going up to par, course correct. What do you need to do? What activities you need to put in place to achieve them and be successful?
Thank you, Rogelio. While we give an opportunity for guests to respond, would you mind typing in the chat box the top 5 friends that you mentioned? I got a DM about that, so
Okay.
I want to make sure that they wrote that down and didn't miss one. Kevin, would you like to go next, please?
Sure. I'd say 3 tips to me is first and foremost, create a budget for yourself before you start a business, or you want to make sure that you understand the budget that gives you a negotiating power, that gives you a bottom line of what you can and cannot accept, or what you'll be willing to spend. I say the second one would be making sure that on the personal side is just making sure that you are that you're keeping your utilization rate below 10% and below. That's going to help improve your credit. And just kind of making sure that you're monitoring your credit, as frequently as possible. Sometimes you get notifications from, some of these platforms like Credit Karma that keeps you updated. If your score went up, if your score went down, kind of look at that. And just kind of be mindful of if you are going for funding, make sure the third one is just you understand the terms and conditions of what you're signing, and making sure that you shop around for different loans as well. So you understand sometimes there are platforms that do allow you to do kind of a comprehensive analysis of all of the loans that are out there that you're going for. So make sure you find some of those platforms if you can to help you find the best rate possible.
Thank you so much, Kevin. And Leticia, would you like to close us out, please?
Yeah, so we talked a lot about preparation. So I kind of say the 5 P's. Proper preparation prevents poor performance, right? So being prepared, be in the know where you stand. So we talked about that, right? I'm again going to go back to keep your personal and your business separate. So know where you stand in both, and ensure that you are keeping good records, right? And when you create this budget, check into it. It's a roadmap, right? So don't just create it and keep it there. Continue to go back and look to see where you need to make a change, right? Where do I need to change? What else is happening? What do I need to increase? What do I need to decrease, right? So be in the know of where you stand personal and business. Do your research, right? We keep saying that. Know the different resources that are out there for you, and really take some time to do the research within your industry of what you're going to be in. But again, for personal, know where you stand. For business, know where you stand. Keep everything separated. Your accountant would definitely love you. Your bankers would definitely appreciate you. And again, just, get a plan in place for yourself. So again, be prepared, do some preparation.
Amazing, amazing, amazing. Thank you so much, everyone. If y'all notice in the chat box, Rogelio put on there the top 5 friends you need to keep. So make sure to screenshot it, anything you need. I want to thank everyone, thank our panelists, thank everyone that joined us today. This was an incredibly engaging conversation. So thank you. And I'm going to remind you all that a recording of today's conversation, along with the others, are featured on our social media channels and our special COVID-19 business resource portal, ChiBizHub.com/COVID-19 support. As well, we encourage you all to follow us on social for links to future webinars, grants, and information to help you better run your business during these challenging times. On behalf of everyone at World Business Chicago and ChiBizHub, we wish you and yours good health and peace of mind. Thank you again.
Thank you.